Market just feels weird right now. I met with somebody last week who wanted to sell because they thought we're at the top of the market, and their plan was to cash out, go rent something for a year, and then buy back when prices come down. But before I go any further, check out the description below. You'll find a couple of links there. The first will give you a monthly home value estimate dropped directly into your inbox, and the second will allow you to search for all Triangle area homes. Lastly, please like and subscribe. It just helps YouTube know that you like the content. It helps us reach more people. Now, I had to begrudgingly tell her I don't think that that's likely to happen. As I've been saying all along, prices are remaining stable because supply is tight. There's not enough homes for sale. So even though rates keep going up, it has the reverse effect of lowering prices. It's so interesting. If you look at the Great Recession or the interest rate hikes in the 1980s, what usually happens in a normal market is when rates go up, the cost of buying a home becomes more expensive, so less people buy homes. And that eventually causes prices to fall, which eventually makes people interested in buying again because now homes are a better deal, right? So buying starts and then prices go back up. That's a normal market cycle. We're not in a normal market. And the main reason we're not in a normal market is because there wasn't enough homes built during the last decade. What we've got now is the price of lumber starting to fall, which is an indicator of less demand on lumber, which means, once again, builders are not building the number of homes that they need to build to get us out of this problem. So it's not likely that we're going to build ourselves to more inventory. It's also not likely that we're going to see enough resale homes come on the market because as we sit here today, interest rates for a 30-year fixed rate mortgage are in the mid 7s. And, it's having the same effect that it did last year. Basically, people that don't have a strong motivator to sell, and then, maybe those same people would become buyers in the market. They're just staying put. There's two main contributors to the problem that we're in. One is the lack of building that's happened in the last 10 to 15 years. The second is the 30-year fixed rate mortgage that is at 2 to 3% for about 25 to 30% of homeowners. Those two things combined are causing the supply constraints. What do I tell her? I think that prices are going to come down next year is what she said. So I'm going to rent an apartment and I'll buy back in lower. First of all, nobody knows for sure what's going to happen. I think that if you would have asked anybody a year and a half ago if this is the situation we'd be in today, most people would have said, yeah, rates, inflation's going to cool off and then they're starting to bring interest rates down, which generates more buyers and sellers and starts to heal the market. Although in that situation too, prices are likely to go up, but save that for another day. I see this as a spiral, so an inward spiral, basically. You've got high prices and you've got not a lot of homes for sale and you still have some buyers in the market. So in order for the prices to fall, buyers need to get completely out of the market. People just need to stop buying homes. That's not likely to happen because you still have a significant population of people that are 35 and under that want to become homeowners. They believe in the dream of homeownership. So there's always going to be some demand, or I won't say always, but there has proven to be some baseline level of demand in the housing market. And as the supply has come down, sure, the number of buyers in the market has also come down, but that baseline demand is still there, eating up the inventory that does come on the market. So the higher that rates go, the less homes come on the market. That spiral continues and prices either remain steady or go slightly higher. It's the weirdest market. Some people are even calling it a housing recession. The number of transactions that are happening is just so few compared to our annual transaction count over the last decade. We went from about 6 million homes sold nationally down to about 4 million. So that's a 30% reduction or so in the number of homes actually trading hands. So to that person who asked me that question, I have to candidly say, look, I don't know for sure what's going to happen a year from now. But the one thought I did give her was this. If you are in that situation, you're finding yourself, you feel like the housing market might be at the peak. Maybe you've been saying that for years and prices have just continued to go up. Here's an idea for you. As long as interest rates remain high, there are other investments you can make and other places to put your money that you can get a safe, reasonable rate of return. For instance, just one idea, the trading platform Robinhood has a 5% money market account. Basically, you can put your cash, you don't even have to invest it. You just hold your cash there and they'll pay you a 5% annual return. I know American Express has a similar product and they're starting to pop up more and more. So my thought to her was, all right, the real estate market appreciated 5% on average in 2023. Let's say that trend continues, and in 2024, by the end of the year, we see another 5% appreciation, which, we're kind of trending towards. What's to say you can't sell your house, take that money out, lock in those gains, right? Go rent an apartment to kind of wait it out and see what happens. And in the meantime, you take your gains from the real estate asset and you slide it over into a 5% interest bearing account. You're still keeping pace with what the appreciation has been. The only difference is if the market goes down, the real estate market goes down, you've locked in those gains and you're still earning that 5% interest. Now, could that interest rate change? Sure, of course it could. But you've got the cash. It's liquid, it's accessible. You can do with it whatever you want and you can get to it in a moment's notice. So they call that liquidity. It's not tied up somewhere in some product like a house that you have to put on the market and hope somebody buys. So if you're in that situation, that's the best advice I can give you. Again, without knowing for sure what's going to happen in the next 12 months, if you're risk averse and you don't want to wait and see and you feel like the real estate market is at its peak, then get out. If you're an investor, get out, put that cash aside, put it into an interest bearing account and ride it out. The potential risk to that is, let's say the real estate market appreciates 8% versus 5%. Well, then theoretically, yeah, you've missed out on that extra 3%, but that's where you have to weigh the risk and reward because you no longer have your money tied up in that real estate asset. So if the same thing happens on the flip side, let's say it doesn't go to 8, it doesn't even hold 5, maybe it goes to 2. Well, because you're earning 5% over here in your money market account, you actually have beat the real estate market and you have access to that cash. We're trying to give people the best advice we can for their specific situation without knowing the future, right? I'm still a long-term holder. I just believe in the long-term strength of real estate. I think the market's going to fluctuate. It's going to go up and down, but over time, it's certainly proved that real estate is always going to go up. It's a utilitarian asset, meaning you use it. It's not like buying gold. Most common use for gold is jewelry. Like, who cares about jewelry? People need houses to live in. So it's a unique asset class and it's always going to go up in value. But with these interest rates bouncing around the 7 to 8%, it's definitely putting jitters in the market. And on a week-to-week basis, the showing activity can fluctuate greatly as people are checking the amount of money that they qualify to borrow. And as those rates adjust, that number that they're qualified goes down and the possible homes that they can purchase, that list shrinks as well. So just some thoughts. If you have any questions about this or you have a specific situation that you need help talking through, I'm more than happy to do that with you. Just reach out anytime. I'm here for you. Thanks so much.